Have you ever wondered what moves the price of gold in the market? It's a fascinating question, and today, we're going to delve into the heart of this precious metal's financial dynamics. First, let's understand the concept of fundamental analysis. This is the process of examining the intrinsic value of an asset. For gold, this could involve studying macroeconomic factors, such as inflation rates, the value of the US dollar, and global political stability. Think of it like this. When the economy is stable and the dollar is strong, gold prices usually drop. Why? Because investors feel secure and they prefer to invest in other assets that can provide a higher return. But when there's economic uncertainty or instability, investors tend to buy gold as a safe haven. This increased demand often pushes the price of gold up. That's the gist of fundamental analysis. But there's another important tool in understanding the price of gold: technical analysis. Technical analysis is like reading the tea leaves of the market. It's all about studying past market data, primarily price and volume, to predict future price trends. In the case of gold, technical analysts may study price charts to identify patterns. They use tools like moving averages, trend lines, and resistance levels to predict where the price might go next. Now imagine you're looking at a graph of gold prices. You notice a pattern. Every time the price hits a certain high, it falls back down. That high price is what we call a resistance level. If the price breaks through this resistance level and stays above it, that could indicate a bullish market for gold. On the other hand, a support level is a price that gold doesn't seem to fall below. If the price breaks below this support level and stays there, it could indicate a bearish market. So, in a nutshell, what moves the price of gold? It's a combination of fundamental factors like economic stability and investor sentiment, and technical factors like price patterns and trends. It's the dance between fear and greed, uncertainty and confidence, history and prediction. And understanding this dance can help you make more informed decisions about when to buy, sell, or hold this timeless asset. Remember, investing always involves a degree of risk, and it's important to do your own research and consider seeking advice from a financial advisor before making any investment decisions. So, the next time you see the price of gold moving, you'll know there's a lot more to it than meets the eye. It's not just a shiny metal, it's a barometer of global sentiment, a testament to our collective hopes and fears. Follow Trader's Lessons for more.